Hello and welcome to this ZipperAgent webinar. My name is Sophia and I'm here with Ray. Say hi, Ray.
Hi, Ray.
Today we're talking about brands and business plans, how to build your real estate business.
If you have any questions as we're going through this webinar, just type them up and email them to me at rstockwell@zipperagent.com.
We'll be more than happy to answer them. So let's just get to it. The first question that comes up when business plans are often discussed is, why do I need a business plan in the first place?
Well, Benjamin Franklin supposedly once said that if you fail to plan, you are planning to fail.
And regardless of whether or not he actually said that, every successful agent or brokerage works off a business plan. Today we're going to go in depth discussing how to prepare a business plan for a real estate broker, but
For those of you who are agents and not brokers, stick around. There's a lot of information that will be of value as you develop your own business. So let's start with the executive summary.
all right. So it sounds kind of obvious, but one of the first things you need to think about when you're starting a business is the name of your agency and the type of structure that it will have. So not that long ago, it was really common for a broker to simply use their last name and then put the word real estate or realty after it and use that as the agency name. But that's really not as effective as it used to be.
How customers look for homes has changed a great deal in the past few years. As you can see in these examples, report after report has shown that most people today are looking on the internet when they are thinking of buying a home. It only makes sense to have an internet presence for your business. As you consider the name of your agency, try to think like a consumer.
That means thinking in terms of long tail searches on the internet. So searches like the three we've just looked at, Washington, D.C. homes for sale, new homes in San Diego, and waterfront homes for sale in Florida are much more likely to attract high search results than Foster Real Estate or Ray Stockwell Realty.
How much lower the volume of searches is for Ray Stockwell Realty? Thank you, Sophia. Do a little research or pay someone to do it. Settle on a name that is likely to generate more search results. This should pay off in the long run by providing a higher number of what are called organic search results. In other words, people will find your website, Facebook page, Twitter account, etc. without paying for advertising. One great app that can help you figure this out is Keywords Everywhere.
You also need to figure out for tax purposes what kind of corporation you're going to form. Some of the most common ones are sole proprietorships, limited liability corporations, limited partnerships. Individual agents obviously don't have to worry about this, but if you're a broker, it is worth discussing your options with a business attorney to make sure you pick the best one.
You should also mention the place where the company was formed, the principal officer of the company, the business address of the company, and the start date of the business.
And these don't have to be long explanations. We're really just looking at a sentence or two about why the company is located where it is, and another sentence or two about the qualifications of the principal officer, and then you're done.
It's meant to be a summary, a brief one at that. And with that executive summary completed, it's time to write down the objectives of the company.
Yes.
Basically, you want to make money and how you plan to do it.
So we recommend writing objectives down as bullet points. First and foremost, you want to be profitable. Secondly, you want to define what your business scope is. That means the kinds of real estate you're going to sell, the kinds of investments you're going to interact with, and any consultations that you'll be doing. If you're a broker, you also want to define the agent profile and agent qualities of the people you're looking to hire. Similarly, you want to have an objective for your business size. Besides those sort of solid numeric things, you should also consider writing objectives for how you're going to develop a strong corporate identity, how you're going to establish good working relationships among your employees, how you're going to become a top broker in your area, and how you're going to realize a positive return on any investments made in your business.
As you think through these objectives, try to keep in mind the concept of SMART goals.
What are SMART goals, right?
I'm so glad you asked, Sophia. SMART goals are goals that are specific, measurable, obtainable, realistic, and time-based.
So an example of a well-written SMART goal-based objective that follows all these guidelines is right here. Quote, become one of the top brokerages in Somerville, Massachusetts by achieving $34 million in total annual sales in 5 years. This is a good goal because it is specific. It has a clear numeric revenue goal, $34 million in annual sales. It has a clear time frame in 5 years. And based on the current market conditions in Somerville, it's actually achievable.
After these bullet points should come an explanation of how these objectives can be obtained. For example, and bear with me on the numbers, the company will maintain a sales force of 10 agents. The average sale price of all homes sold in Somerville is $857,000. If each agent set a goal of selling one side of a transaction every 3 months, they will sell 4 sides per year. 857,000 times 4 equals $3,428,000. Times 10 agents equals $34,280,000. With proper training to be provided on a weekly basis by the broker and retention incentives for agents, this goal should be easily accomplished in 5 years. Now, you may wonder, what would the average agent get out of this? On average, the agent would earn $12,855 on each side of the sale, or $51,420 per year. The corporation would profit as follows: $8,750 per side times 4 equals $34,280. Times 10 agents equals $342,800.
So you see how much that goal can be broken down into concrete numeric steps. That's part of what we mean by a SMART goal. So once you've written all of these objectives, it's time to write your mission statement.
The mission statement is a guide for starting and managing a new business and a basis for the marketing plan.
You want to include things like generating a profit, how you're going to do that. How you plan on growing at a challenging yet manageable rate. That means a rate that is impressive and challenging, but also one that is not too quick, so you don't get inundated with work and have trouble living up to your professional commitments. You also want to make sure that your mission statement follows any of the ethical guidelines set forth by the appropriate state and federal regulatory agencies.
The mission statement will likely include several steps. First, recruit real estate agents. Then, on an ongoing basis, assist both homeowners selling their homes, as well as home buyers purchasing the home of their future.
And here you can really see how the mission statement takes those goals and objectives and continues them into the future. The mission statement is something that applies not only to the startup of your business, but also to the ongoing running of it.
That would bring us to the company summary. Mm-hmm. First, think about who your customers are and how you are going to service them. Then discuss the ownership of the company.
Yes. This is where we are going to start to actually use a lot of math. Well, a lot of simple math, but still a lot of numbers. So what we're going to do is we're going to walk through this last 2.2, a startup summary, and show you what kinds of itemized features should go into each category. When you're thinking about your startup summary, you want to ask yourself what kinds of resources you need to build your business. So that means things like a website, any office equipment like laptops or cell phones, any other technology expenses like, say, a CRM, any company stationery, any legal costs, any furnishings for said office, any office advertising, and other expenses associated with opening a physical office, like, say, rent.
Sticking with our example of an office in Somerville, Massachusetts, lease office space averages about $1.50 to $8 per square foot. That's approximately $2,000 a month, plus utilities for efficient leased office space. Commercial leases, as you may know, will be for 3 to 5 years. First month's rent and a security deposit equal to the monthly lease rate will be payable at the time of the lease start date. The spreadsheet and charts on the screen show some typical startup costs. Yours may be different.
Yeah. And once you've laid out what these rough costs are going to be, it's time to figure out what sort of assets you have, so how you're going to pay for these costs. Assets include things like cash, any investments you're going to get, and also any office equipment you have that carries an inherent cash value.
You also need to consider what liabilities you have.
We've included capital in the liability section here because although it is money that you've raised to start your company, you need to pay it back. It's not money you get to keep.
Now for a little more math. Total planned investment minus loss at startup expenses equals your total capital. Total capital plus startup expenses equal total funding.
And don't worry, at startup, it's perfectly acceptable for total funding to be more than total capital. People do not expect a business to make money to show a profit before it even starts.
As you grow your business, you want your total funding to surpass your total capital. This will lead to a profit.
Once you've written all this out, it is worthwhile to run your numbers by an accountant. At the very least, this will help you when you do your taxes.
This is an appropriate place to include a section on services.
All right. That means you want to convey a sense of who your customers are, what sorts of services you will be providing to them, and then why your services are unique.
Market segmentation is the next section you want to address in your business plan. Talk about each segment that you will service, how and why they will do business with you.
This includes home sellers, home buyers, landlords, rentals, referrals, all sorts of people who are segments of the market who are coming in to your business area.
Including a chart like the one on the screen that shows anticipated growth in each of these segments is also useful.
Yeah, so we have two charts up. We've had two charts up here currently. This is breaking down which of your whole market that you're targeting, breaking down which segments you're targeting specifically. And here is what Ray mentioned about the growth. Also at this stage in your business, it's useful to provide a brief summary of your marketing plan. A good starting point would be something like, we cannot survive just waiting for the customer to come to us. We must be better at focusing on the specific market segments whose needs match our offerings. Therefore, focusing on targeted marketing is a key to our future.
Definitely want to include some figures that show your anticipated growth over a few years. 5 years of growth will be enough to show. Now, all of this sounds nice, but we also need to explain how it is going to be accomplished in a section called Strategy and Implementation Summary.
Yes. In our example, the brokerage in Somerville wants to pay agents at a high commission rate because those agents themselves are responsible for paying for a lot of their marketing.
Statements such as, to be successful, we are striving to become this corporation. I blew it again. To be the success we are striving to become, this corporation realizes it must place a tremendous concentration on its in-house licensed agents. The agents with this firm will be supported and assisted to the best of our ability. That would be an appropriate statement.
Once you've written up this strategy implementation summary, it's time to come back to this idea of what makes you different. That's your competitive edge. Why is your agency, why are your services different from those of your competitors?
Think about it from a consumer view. If I have to choose between real estate agencies to work for, real estate agencies that are going to market my house, real estate agencies that I'm going to invest in, what sets you apart from the rest?
Perhaps you are a recognized expert in real estate. Perhaps you have decades of experience. Maybe you have certain credentials, like you're a senior real estate specialist that others in your area don't have. Maybe you run a real estate school in addition to your brokerage, or you've received some sort of formal recognition from your peers. All of these are good examples of your competitive edge.
Some people would call this your unique value proposition. it should include things that back up your marketing plan. For example, your in-house training and services available to agents.
This is all pretty straightforward. So once you've completed your competitive edge analysis, it's time to start thinking about your sales strategy. So if you think about competitive edge as what makes your agency different, your sales strategy would be, how do you put that difference to work? So this can be pretty straightforward. So what we're going to do is we're going to run through the sales strategy of our hypothetical brokerage in Somerville. And Ray's going to read out pieces of what their strategy is. And then I'm going to explain how they actually go about implementing that.
Sales in our business is gaining property listings and utilizing a marketing plan that works best for the client.
So this Somerville brokerage runs a highly targeted Facebook campaign designed specifically to get seller leads. Then they have a CRM like ZipperAgent that can directly import these leads, allowing agents to contact them quickly, agents familiar with the area, and then move that lead quickly and directly from initial interest point to actual communication in the form of phone work or drip campaigns.
We locate and match homes to buyers according to the criteria submitted by the buyer.
Agents are working with a CRM like ZipperAgent and other market-based information that allows them to quickly search for buyers whose criteria match the listings in the local area.
We assist in relocating clients to their new destinations and or assist clients relocating to our area in their home search. We offer an excellent referral service anywhere in the United States.
What we just mentioned, the CRM lets them search the criteria of clients who are relocating to the area. Perhaps the brokerage also partners with local restaurants or hotels or something to have a welcome to the neighborhood package.
We search for lease properties for individuals wishing to lease versus purchasing.
Brokerage uses a CRM like ZipperAgent that allows them to search and store information on their rental transactions in the same place as their traditional buying and selling transactions.
We allow above standard commission percentage rates, then provide excellent marketing and advertising programs.
The brokerage uses a CRM that offers comprehensive marketing services and also has put a lot of time and effort into training its agents on how to use those services.
We provide our selling agents with an excellent support program as well as guidance.
The brokerage offers weekly evening classes about sales techniques.
Each potential seller listing or buyer representation we receive should be treated as an individual mission. Each client and client property must be analyzed to assure that our marketing program supplied fits their particular property and promotes it in the best way. The brokerage is focused on comprehensive, focused customer service, so providing this kind of service is central to their sales strategy.
Exactly.
The next section wants you to cover sales forecast. Charts do provide a very easy way for people to visualize your plans for success.
So let's take a look at what some sales forecast charts might look like. Here's one for monthly sales going forward for a year. And here's one for sales by year going out 3 years.
You should do both a monthly and a yearly breakdown for your sales forecast.
Yes, especially for that critical first year. When you're writing out these charts, remember to include any explanations that are necessary for folks to understand your forecast. And that means stuff in addition to the key you see here on the right. So for example, here in New England, you might want to include something that says that sales in the fall and winter are typically lower than in the spring and summer.
At this point, the business plan is really beginning to take shape, and anyone reading it is probably getting a good idea of your vision. For people to buy into it, however, investors or potential agents, you want to give them a roadmap.
Fortunately, you've already written that roadmap. You can measure your success against these milestones that you laid out in your sales by year plans. As you start to move toward these goals, it take time once a quarter to reassess and see, are you achieving them? Are you exceeding them? And if something isn't quite working, what can you tweak in your business plan to reach these goals?
With the milestones and benchmarks completed, we now move to a section called Management Summary. Agents, customers, and organizations you belong to will ask the same question at some point in one way or another. Who is minding the store?
It really doesn't matter if your company is a multinational conglomerate or a sole proprietorship. You need to include a management summary in your business plan.
For many brokerages, the management plan will be quite short. In fact, if a broker may be the only manager, or is it often the case with married couples who both sell real estate, one spouse may be the broker and the other may be an associate broker?
Yeah. So here's what you should include in a management plan. You should list out the duties and the responsibilities of anyone who's managing other people in your agency. In case of the sole proprietorship, a statement of your net worth should also be included.
New agencies are really set up to have the broker be the only one working in the office. It makes sense that if you have a management plan, you are planning on managing one or more people.
Even if the broker is going to be the quote-unquote sole employee of the company, a personnel plan, really, you should write one down.
The personnel plan comes into play when you hire an employee as opposed to an independent contractor. Often, this would be an administrative assistant or a transaction coordinator.
What a personnel plan does is it lays out the duties, the responsibilities, the hours, and the salary of these employees.
The personnel plan is followed by a financial plan.
Yes. The personnel plan that we just mentioned is going to discuss who gets paid and how much. So the financial plan is going to discuss how that's all going to be financed. Things like cash flow, whether it's your cash is coming from credit or venture capital, all these good things.
As you begin an agency, there are certain assumptions you have to make. Now, there is an old adage that says when you make an assumption, you're making an A double crooked letter out of you and me, and that may be true, but when anyone starts a business, it is based on certain assumptions.
I mean, think about it. You've already assumed that you have a service that people want to buy and will pay you money for. You're probably also assuming that the economy is good and that now is a good time to invest in selling this service.
We're also going to make certain assumptions about interest rates and the like that can be listed in general assumptions.
Once you've written out the assumptions that underlay your financial plan and why you think they're sound, it's time to go back into the numbers with your projected profit and loss.
This is all together in black and white or black and red.
Talking about charts again.
You're going to be looking at projected profit and loss. So let's start with the easiest of examples. You're a brand new agent. The broker gives you a bunch of business cards and tells you to go get a listing. So you go out of the door and you go start door knocking and handing out your business cards.
Right now, you are showing a loss. So let's take a look at this chart. You took a training course, and that cost you $350. You paid for your license, that cost you $105. You joined the National Association of Realtors, that cost you $120. You joined the Massachusetts Association of Realtors for $161. You joined the Greater Boston Association of Realtors for $300, and you signed up for the multiple listing service, which is $87 a quarter.
You've started your career as a real estate agent with nothing. So your initial loss is $1,123. If you get a listing from your efforts and you spend no money on marketing, you could make a profit.
So let's say you could get that listing. And it sells for $350,000. Oh dear, I'm sorry. Your first listing sells for $350,000. You took the listing at a seller's commission of 2.5%, so your agency is paid $8,750. If you have a 70-30 split with your broker, you're going to receive $6,125 from the sale.
Your profit's going to be $5,002.
Benefit and that of any investors, a chart showing your break-even point should fit into your plan once you've done your projected profit and loss.
It sounds like a lot of numbers, but remember, take it slow and write everything down. You'll see how it all comes together.
Calculations are going to be more complicated because you have multiple agents and other expenses that individual agents don't have to worry about. But the same underlying logic applies. All items, you start with zero money. All items that come in have a dollar value and are added to zero. All items that go out have a cash value and are subtracted. These assets and liabilities are traditionally summarized on a balance sheet. You can find all sorts of useful balance sheet software online. The purpose of the balance sheet is, of course, to present an accurate picture of the present financial health and the anticipated financial future of your company. Before we go any further, let's take a quick look at the break-even analysis.
Break-even analysis. This gives your investors a rough idea of how long it will take, how much money you need to make before you will start showing a profit. This is something that investors really want to look at.
And even if you're just an individual agent or a very small brokerage and you don't plan on getting a lot of investors, it can be a useful tool for you yourself to plan so that you can see how much money you have to make before you start turning a profit.
That's a brief summary of the things you need to know. We will be emailing out a sample business plan based on the topics we have discussed in this webinar.
The long and the short of it is that business plans don't have to be scary. They're a straightforward way to understand your business and plan for your future. That's all it is. The really important thing to remember is that they are never a static document. They should be changed as needed. If your predictions of anticipated revenue do not come to fruition, or you end up looking for a lot more, you end up bringing in a lot more business than you thought you would, you should update your business plan to reflect this. If your business grows by leaps and bounds, you might need to get more office space or hire more people. Then it's also time to update your business plan to reflect those changes.
We're sending you a basic business plan guideline based on the examples that we've talked about. Whether it is helpful or not, please let us know. We want to keep bringing you useful webinars about topics that you're interested in.
And please keep your eye out for our next webinar. We're really excited to bring it to you, and we can't wait to see you next time.
Thanks for watching.
Bye.